Welcome to Fast Money. Today, we're diving into a story that's shaping not just markets, but the very fabric of our daily lives. The world is changing at a pace we've never seen before, and at the heart of this transformation are the resources that power our homes, fuel our cars, and connect our devices. We're at a turning point in the global economy, one defined by the raw materials that build our world. From the ships that cross oceans to the mines that dig deep into the earth, the flow of energy and materials is the lifeblood of modern civilization. Energy and industrial metals are the backbone of modern civilization, essential for everything from homes to smartphones. Every wire, every circuit, every building relies on these fundamental elements. Without them, the world as we know it would grind to a halt. Today, these markets are signaling immense change. Prices are swinging wildly, and investors are watching closely as the old rules of supply and demand are rewritten in real time. Experts call this the dawn of an energy transition supercycle, a fundamental reshaping of global supply and demand. The push for cleaner energy, electrification, and new technologies is creating a surge in demand for metals and minerals that power the future. The push for reindustrialization and the rapid energy transition are driving unprecedented demand for metals like copper and silver. These aren't just commodities. They're the building blocks of electric vehicles, renewable energy grids, and the digital infrastructure that connects us all. Meanwhile, supply is struggling to keep up, creating inflation and volatility. Shortages ripple through supply chains, pushing up prices for everything from electronics to groceries, and making it harder for families and businesses to plan for the future. The era of cheap, abundant materials is ending, replaced by scarcity and rising costs. Factories are closing, mines are running dry, and the cost of energy is becoming a central concern for governments and households alike. What happens in the mines of Chile, where much of the world's copper is sourced, can send shockwaves through global markets. A strike, a flood, or a new regulation can mean the difference between abundance and shortage. Or consider the refineries of China, where raw materials are transformed into the products we use every day. Decisions made here ripple outward, impacting household budgets, business strategies, and government policies worldwide. Understanding this new reality is crucial for navigating the economy of 2025 and beyond. Whether you're an investor, a policymaker, or just someone trying to make sense of rising bills, the forces at play in energy and materials will shape your future. This is the story that will define the next chapter of our global economy. The choices we make now about energy, materials, and innovation will determine the prosperity and stability of generations to come. Copper, known as Dr. Copper, is flashing a warning. A global supply shock is underway, with major disruptions at key mines in Indonesia, Peru, and Chile. These aren't minor setbacks. They're catastrophic failures at the world's most important copper sources. The result: copper prices have smashed through resistance levels, attracting a wave of new capital. Years of underinvestment mean new mines can't come online fast enough. The industry is unprepared for exploding demand, with a pipeline of projects that's nowhere near enough. We're facing a structural deficit, a long-term gap between what the world needs and what mines can deliver. This is a market where prices have only one way to go. While copper supply is tight, demand is transforming. The green energy transition is driving a massive, sustained appetite for copper and other critical metals. Electric vehicles alone require nearly 4 times as much copper as traditional cars. Wind turbines and solar farms are also incredibly copper-intensive. Upgrading power grids for renewables and EVs will require unprecedented amounts of copper and aluminum. This new demand is mandated by government policies and corporate commitments worldwide. Achieving carbon neutrality is impossible without a surge in metals consumption. The world has legislated a future where demand for these metals will only grow. Platinum's recent surge has been nothing short of spectacular, soaring nearly 70% this year and capturing the attention of investors and industry insiders alike. This dramatic rise isn't just a blip on the radar. It's the result of a unique convergence of factors that have created a perfect storm in the platinum market. The market is now in steep backwardation, a rare and powerful signal that points to a severe physical shortage of platinum. This means that buyers are willing to pay a premium for immediate delivery, highlighting just how tight supplies have become. For 4 consecutive years, the world has consumed more platinum than it's produced, steadily depleting global inventories. Warehouses that once held ample reserves are now running on empty, and the scramble for remaining stockpiles is intensifying. The rally truly ignited after industry leaders and analysts exposed the widening supply-demand gap at the prestigious London Platinum Week. Their warnings sent shockwaves through the market, prompting investors to take notice and fueling a surge in buying activity. Demand is coming from all directions: jewelry, industrial manufacturing, and especially the booming hybrid vehicle sector. Each of these industries relies on platinum for its unique properties, and together they're driving consumption to new heights. In the world of jewelry, platinum is regaining its shine as a fashionable and affordable alternative to gold. As gold prices climb, more consumers are turning to platinum for its elegance, durability, and relative value. Meanwhile, industrial uses for platinum are expanding rapidly. From the production of high-performance silicones to cutting-edge medical devices and advanced machinery, platinum's versatility is unmatched, and its applications are only growing. Perhaps most notably, the rise of hybrid vehicles, which depend on platinum-based catalysts to reduce emissions, is providing a powerful new engine for demand. As automakers ramp up production of cleaner cars, platinum's role becomes even more critical. After a decade of stagnation and decline, platinum's breakout performance suggests that this rally may just be getting started. The combination of tight supply, surging demand, and renewed investor interest is setting the stage for further gains. With platinum still trading at a significant discount to both gold and palladium, its relative cheapness is attracting even more buyers. As the perfect storm continues to build, all eyes are on platinum's next move. There's a fascinating shift between platinum and palladium in auto manufacturing. Palladium was once the go-to for gasoline engines, platinum for diesel. A supply crunch sent palladium prices soaring while platinum lagged. Automakers responded by re-engineering catalytic converters to use more platinum. This substitution isn't simple, it takes years of R&D, but the cost savings are huge. Now the price gap has collapsed, palladium is down, platinum is up. Every major automaker is making the switch, shifting demand toward platinum. This structural change will support platinum prices for years. The platinum-palladium story shows how market forces correct imbalances. For investors, it's a lesson in watching relative value between commodities. Amid the metals boom, gold and silver are making a comeback. Gold hit new highs, driven by economic uncertainty and central bank buying. Central banks, especially in emerging markets, are diversifying away from the US dollar. Institutional investors are also increasing gold allocations. Silver, with its dual role as a precious and industrial metal, is even more bullish. Industrial demand for silver is surging. Solar panels, EVs, and 5G all need it. Silver ETFs and physical demand are both rising sharply. The market is in a supply deficit, creating a powerful squeeze. Both metals offer a hedge against inflation and a play on the green transition. Silver, in particular, looks poised for a significant move higher. Energy markets remain the foundation of the global economy. Oil prices seem calm, but that calm is deceptive. OPEC Plus is struggling to meet production targets, and geopolitical risks loom large. Sanctions on Russian oil or disruptions in the Middle East could trigger a supply shock. In the US, natural gas is cheap due to a temporary glut, but that won't last. Europe, scarred by past crises, has filled its gas storage early, stabilizing prices for now. But this stability is fragile, dependent on continued LNG flows and mild weather. The global energy equation is a tense balancing act, with volatility always a threat. Metal price surges aren't just numbers, they hit your wallet. Higher copper and platinum costs mean more expensive cars, homes, and renovations. Electronics and appliances will also get pricier as manufacturers pass on costs. Inflation rises, paychecks stretch less, and companies may cut jobs to cope. For investors, rising gold and silver prices can hedge against inflation. But for most, the cost of living climbs, making it harder to save. Commodity trends are reshaping household finances everywhere. The big question on everyone's mind is, what's next in this commodity supercycle? After years of volatility and dramatic price swings, investors, policymakers, and industry leaders are all searching for clues about the future direction of global commodities. Will prices continue to surge, or are we on the verge of a new equilibrium? Understanding the forces at play is crucial for anyone with a stake in the global economy. One key area to watch is the mining industry's supply response. As demand for metals and minerals rises, companies are racing to bring new projects online and invest in cutting-edge technology. These innovations could help ease supply deficits, but ramping up production takes time and significant capital. The pace at which new mines come online and how quickly technology can boost efficiency will shape the market's next phase. Central bank policy is another critical factor. Interest rates, inflation expectations, and monetary tightening all influence commodity prices. A sudden shock in the bond market, like a spike in yields or a surprise policy move, could trigger a sharp correction, sending ripples through global markets and impacting everything from oil to precious metals. Geopolitics remain a wild card in this supercycle. Trade disputes, sanctions, and shifting alliances can disrupt supply chains overnight, creating shortages or gluts in key commodities. Political decisions made in one part of the world can have immediate and far-reaching effects on prices and availability elsewhere. Meanwhile, central banks in emerging markets are quietly accumulating gold, signaling a potential shift in the global financial order. This move reflects concerns about currency stability and a desire to diversify reserves, which could have long-term implications for the value of both gold and fiat currencies. For investors, the era of cheap commodities is likely over. Tangible assets like metals and energy resources are back in focus as inflation and supply constraints drive prices higher. Diversifying portfolios to include physical commodities or related equities may offer protection and opportunity in this new environment. Tracking relative prices, such as platinum versus palladium or gold versus silver, can provide valuable clues about shifting demand and emerging trends. These price relationships often signal where capital is flowing and which sectors may outperform in the months ahead. Ultimately, this is more than just a trader's story. It's a fundamental economic shift that will impact industries, governments, and consumers worldwide. The ripple effects of this supercycle will be felt in everything from manufacturing to energy policy. In a rapidly changing landscape, staying informed and adaptable is your best tool for navigating what's ahead. The commodity supercycle is rewriting the rules. Make sure you're ready for the next chapter.